Are you feeling squeezed by your mortgage? Ultimately, right now, you're not alone. Millions of Canadians who have approached mortgage renewal are having the same question and ultimately feeling the same pressures. And this week, I want to take an opportunity to go through what we're talking about with mortgage renewals, ultimately some advice that we can give to our clients as we're looking at their finances right now, and some tips and tricks on how to maybe avoid or help yourself if you're finding yourself in a situation right now where you're financially strapped. So ultimately, we're going to cover all that and more this week. Once again, thanks for stopping by. If you have not subscribed to the channel, we do invite you to subscribe. Hit that notification bell while you're down there. Don't forget to leave your thoughts, questions, and concerns in the comment section below. Don't forget to like and share the video. Let's get right into it. So ultimately, right now, many Canadians, millions of Canadians who have approached mortgage renewal have a couple decisions that they need to make, whether they're just renewing their mortgage, basically either with their existing lender or looking to shop around with different lenders for a better rate or product, are ultimately having some deliberation. Obviously, their finances, their budgeting. There's a lot of Canadians right now that are looking at their mortgage renewal as an opportunity to maybe restructure and blend in or consolidate some of their debt. The conversations we're having with lots of Canadians is that they're all adjusting their budget. They're all looking at the current state of the economy here in Canada with a magnifying glass saying, hey, look, you know what? We were thinking about doing a couple things, renovating, buying a new car, moving. Ultimately, right now, we're going to put that decision on hold until we have some stability. So a lot of Canadians right now are obviously doing a few things. They're cutting back on a lot of their expenditures, those big ticket purchase items, maybe a new vehicle, maybe renovations, obviously taking maybe fewer vacations, or if they're taking vacations, they're taking a more cost-effective vacation as opposed to maybe a more elaborate vacation. Ultimately, that doesn't mean every Canadian is doing that. There's a lot of Canadians that have a obscene amount of wealth and are very well off, and they don't need to worry about, maybe they don't have a mortgage. There are things that we need to consider. Not every Canadian, not every single brush stroke is the same for every Canadian, but for those Canadians with mortgages, those that have a family, that are looking at their financial situation right now, there's ways that things can be a little bit easier for you as long as you understand the options in front of you. And a lot of Canadians that we talked to had no idea that, at mortgage renewal, they become like a free agent with their mortgage. They can either pay off their mortgage completely if they have the resources to do that, or they can look at restructuring or refinancing that mortgage, getting a line of credit if need be, ultimately looking at all the options available to them. So a lot of these Canadians right now, maybe they've done renovations, maybe they've delayed their renovations, maybe they're looking at moving in the next little while because the home itself maybe they've outgrown that space. A lot of Canadians that we're talking to right now are trying to upsize from the condo market. Now, ultimately, there's its own set of challenges there. But I mean, if the place is priced right and you're willing to part ways with it, there are buyers out there. It just may take a little bit longer to sell your home. And that goes the same with single family homes. Ultimately, right now, it is definitely a buyer's market, not a seller's market. So a lot of Canadians right now are also looking at the stage that they're in life, right? So if they're, family with their grown children that are in university or working with their own families, maybe they're looking at downsizing their home to help them put some more money away for retirement. Ultimately, they don't need this large home, these empty nesters. A lot of them Canadians might be looking at, hey, I'm in a smaller property right now. I need to make that move up into a larger home to accommodate my growing family. There's different scenarios, different folks, different strokes for different folks, I should say. Right now, a lot of Canadians that we're talking to too, as they're approaching their mortgage, maybe they don't necessarily need a little bit more money. They don't need equity out of their home, but they're saying, hey, with the interest rate being a little bit higher or significantly higher, depending on what you're doing, fixed or variable. Obviously, we talked about it last week, the Bank of Canada cut, but that doesn't mean the fixed rate mortgages are going to move yet. And depending on when your actual mortgage is renewing, locking in that fixed rate, maybe we'll see some changes if the bond market continues to pull back. We'll talk about that at a different episode. But obviously, looking at your situation right now, if you're approaching mortgage renewal, saying, hey, I don't need new money. I've managed my budget pretty well. We're not in debt. We pay off our bills every month. But we could use a little bit more cash flow every single month. That would help, obviously. maybe some Canadians who have a smaller amortization, they're looking at, say, extending that amortization, going maybe from 20 years to 25 or 25 to 30, looking to stretch that out a little bit to help them offset some of that higher interest rate, those monthly payments. And once again, maybe in 3 years or 5 years, if the situation changes, then they can always re-amortize that mortgage back down, restructure all the way back down to where they would have been, right? So maybe they're doing this temporarily. So understanding that option. Some are looking at the opportunity right now to, as I said, consolidate. They're looking at it. We're going through the numbers with them. A lot of them have downloaded our app, free app in the description box below. You can download it for free. And you're looking at that refinance calculator saying, hey, does it make financial sense for me to pay off this car loan at a higher rate, this higher credit card that I haven't really put a dent into, right? You're looking at all these expenditures. You have your line of credit that's, maybe used because you did that renovation or you bought that new car or you had to do something for your family, and ultimately it's just sitting there at a higher rate of interest than what you could do is if you brought it all together into one simplified payment. So there's two different walks of life here, obviously. And, a lot of Canadians right now we're talking to, some of them have investments because, we're going through that process with them during the application. And they're saying, Ant, we have this money invested here. We put it in the stock market, or put it into GICs or whatever the case may be. And ultimately, we always say, look at your opportunity cost right now and say, is that return on the investment paying out more or less than what you're paying on the mortgage? Do you need that to sort of simplify your life? Are you willing to hold on to that? Are you hoping that the stock market does one thing, move up and continues to reward you with gains? At the end of the day, you have to understand, we're not a financial planner. I'm not sitting here telling you stocks and bonds and what to do. What we're saying is if you have some money there, maybe it's time, or it could be time to maybe put that money to work for you, simplify your life. Or you might say, Ant, I just want to keep it there because I'm getting a better rate of return. But thinking about using your savings or some of those investments to, bridge that gap. Also, maybe even liquidate some of it into cash so that, hey, you're topping up that mortgage. Maybe you're taking advantage of those prepayment privileges to pay less interest over the course of your mortgage. And ultimately, a thing that we've noticed with some Canadians right now, especially as they're looking at their options, we're talking to some repeat clients. We're obviously talking to new clients. And it's good and it's bad in a couple ways. Ultimately, for Canadians, dual incomes, those that are working towards paying off their mortgage with two incomes, some Canadians are deciding to take on an extra gig, an extra side job, a side hustle, whether it be potentially driving for Uber or in the entertainment industry, maybe they're bartending or DJing on the weekends if they have that specific talent. They're looking at those options to help subsidize their income. And ultimately, what I mean by we have to do that. A lot of Canadians are doing that to help compensate for their income because they just can't afford. Two incomes are not enough in this country to actually make ends meet, with an average mortgage. So, ultimately, that's a whole conversation for another day, but this is what we're noticing happening. So what are some practical tips, that we're telling, obviously, as we've gone through them? The one important thing that we always tell our clients is there's so many online tools out there. A lot of Canadians come to us, they don't have a budget. They don't know the ins and outs of their monthly expenses. They're just basically, going in blind. And sometimes I've been guilty of that as well, but always important to reassess your budget. Look at your credit card statements, look detailed in them. Ultimately, there's a lot of apps out there, but look at your, maybe you have dual or triplicated types of accounts. Maybe you have like multiple streaming services for music. Maybe you can bring it down to one or get rid of it, entirely for the time being. If you're really finding it financially difficult, because every little dollar adds up. Maybe you have Crave or Netflix or something along those lines, Prime, so on and so forth, Disney Plus. Do you need all those subscription services? Ultimately looking at maybe cutting back to one or two, ultimately depending on your particular situation. How often during the week do you eat out? Are you shopping at higher end grocery stores? Is there options for you to look at cost saving? Maybe instead of going out for that higher end coffee every day, cut it back. These are obvious things to most people. It's very common sense to some, but not to others. It's very, very important. Some of the simplest things that we tell clients is they're most appreciative of because they didn't really think of it that way. And then obviously looking into your mortgage options is super important. And what do we mean by that? Ultimately, obviously you're on the channel, you're looking at your mortgage, you're wondering about your budget. Super important to understand that, if you're in a situation where you owe credit cards, there's consumer proposals, there's bankruptcies, all kinds of different adverts, especially as we start to see the fear of mortgage delinquencies rise. Ultimately, we'll talk a little bit more about that in a different episode. But, maybe you're insecure about your job. You're thinking, oh, I'm never going to pay off this credit card. I don't have the equity in my home. I have a mortgage. Before you consider all these other consumer proposals, bankruptcies, so on and so forth, which can really damage your credit for a long time to come, talk to a mortgage professional, get the advice. If there's a way to structure within your home, you can preserve your credit, and ultimately short bridges and band-aids can help you save tens of thousands of dollars in the future. A solution that you think is best today may end up costing you with a higher interest rate down the road or for the next 7 years or more, depending on when some of these consumer proposals or bankruptcies are discharged. Ultimately, there's a whole different conversation, but a lot of people come to us and say, Anthony, I don't know if I can make it. And then you're sort of structuring with them saying, hey, you were going to do this. Let's look at this long term if it's going to make sense. And for a lot of Canadians that we position this way, they're happy that we're able to do that, because then we're able to take them maybe into an equity lender, then back into a regular bank. These are some of the strategies that you can consider. Just talk to a mortgage professional, get the right advice. And ultimately, the right advice is don't wait until the last minute. Don't wait and backed up into against the wall and there's no more equity in your home, or you've rode out the train too long and maybe you're now about to lose your job. Who knows, right? You're financially strapped, one partner, obviously your spouse is going to go off work, maybe with a child. I mean, so many different ways to think about. Don't wait until you're losing an income stream or prices for homes drop and there's no equity left in your home. Get the right advice. A real mortgage professional, one who's worth its weight in gold, is not going to tell you things or should not be advising you to do things that are going to cost you more money, right? It should be something that's going to save you money. And at the end of the day, the right advice, true advice, is going to be worth thousands of dollars in savings. So just rest assured, if you're watching this video, you're finding yourself in one of these scenarios that we talked about, or maybe one that we didn't, let us know in the comment section below, that you are not alone. Millions of Canadians are readjusting their budgets, they're readjusting their expenditures, and ultimately that is going to have a big effect on the Canadian economy as we continue to move forward, unless we see the Bank of Canada continue to cut rates. Let us know your thoughts. Next meeting next month. But until next week, thanks for stopping by, and we'll see you all next time.